Hey, welcome. Today, we're going to get right into something that, let's be honest, probably hits a little too close to home for a lot of traders out there. We're going to uncover the real reason why being successful in the markets has way less to do with what you know and absolutely everything to do with how you act. And let's just start right here. Because if you've been struggling, if you've been looking at your account in the red and just beating yourself up, thinking you're just not cut out for this, I really want you to hear this. It's not about being smart enough. It really isn't. And that's why we're here. You see, it's because you've probably been fed a lie. The whole trading education world often points you in the completely wrong direction. So we're going to pull back the curtain on that right now. Okay, first things first, we've got to talk about this massive myth in trading. I call it the endless knowledge trap. It's this idea that just one more course, one more book, one more video is going to be the key. Sounds right, doesn't it? But you're about to see why it's so dangerous. This is where almost everybody starts. We think there has to be some kind of holy grail out there, right? A secret indicator that the pros use, or some forgotten chart pattern that's going to unlock all the profits. And so the search begins. And what does that search look like? Well, it looks a lot like this. You start adding another indicator to your chart, then another one. You're jumping from strategy to strategy every other week. You're binge watching YouTube trading videos until 2 a.m. Sound familiar? All of it hoping that the next thing is going to be the thing. But here's the crazy part. What actually happens after all that searching? The belief is simple. More knowledge should equal more money. But the harsh reality for so many traders is that piling on more and more information just leads to, well, more confusion, more second guessing, and in the end, more losses. It's a total paradox. So you might be asking, okay, if more knowledge isn't the answer, then what is? And this is the absolute core of it all. You have to stop thinking of trading as a knowledge game. It's a behavior game. The market isn't a test where you get an A for knowing the most stuff. You could literally memorize every single candlestick pattern that exists. You could be an expert on every indicator. You could have a library of trading books, and you could still lose money. The market just doesn't care. It doesn't pay you for trivia. And there it is. That's the punchline. The single most important truth in trading. The market rewards how you behave. It rewards your discipline, your patience, your ability to control your emotions, and just execute your plan day in and day out. It's all about your actions. Now, let's think about how most beginners act. I mean, come on, does any of this ring a bell? You see a huge green candle and you just dive in headfirst, chasing it to the moon. Or the market's kind of quiet, you're bored, so you just place a trade. Ugh, we're the worst one. That feeling of FOMO when a stock is ripping higher without you. And then, of course, the desperate revenge trade to try and win back what you just lost. These aren't actions, they're reactions. You know, all those emotional reactions, they really just boil down to these three simple failures. Number one, you don't wait for your perfect setup. Number two, you don't stay patient and let the trade actually work. And number three, the biggest one of all, you don't control your risk. And I really, really need you to get this. None of this is about being dumb. These are not failures of intelligence. They are failures of discipline. It's just human nature kicking in. The entire secret to this game is just learning how to manage those impulses. So how do we actually start to see this behavior on our charts? Well, it all starts with the most basic building block we have, the candlestick. But we're going to learn to see it in a whole new light, not as just some shape, but as a tiny story of human emotion. So for just a second, I want you to forget everything you think you know about candlesticks. At its heart, every single candle on your chart is a little story. It's a story about the epic battle between buyers and sellers, all of it driven by raw fear, raw greed, and plain old hesitation. And right here, this is the huge difference in perspective. See, most traders, they look at a chart, they see a green candle, and their brain just screams buy. They see a red candle, and it screams sell. But a professional, they see the story. They see where fear caused sellers to panic. They see where greed pushed buyers maybe a little too far. And they see those moments of total indecision. Let me be crystal clear about this. If your entire strategy is buy the green ones and sell the red ones, you are not trading. You're just reacting. You're basically playing a simple color matching game. And believe me, the market loves to take money from people playing that game. And that right there brings us full circle. This is the root cause of why so many people fail. They spend all their time reacting to the colors and the noise instead of learning how to actually read the story the price is telling them. Okay, so we've figured out we need to read the story in the candle. But here's the catch. There is one single critical mistake that almost every trader makes when they try to do this, and it's something that quietly destroys their account from the inside out. So I'm going to leave you with this question. Just think about it for a minute. When you look at one single candlestick on your chart right now, what is the one giant flawed assumption you're almost definitely making that's costing you real money? And here's my promise to you. In the next part of this, we're going to show you exactly what that mistake is. And once you see it, you will never be able to unsee it. It is going to fundamentally change the way you look at a chart forever. We'll see you then. All right, let's talk about trading psychology. We're going to dive into something pretty fundamental today. This idea that how you act in the market is way, way more important than how smart you are. Okay, let's get one thing straight right off the bat. If you've been losing money trading, it's not because you're stupid. Seriously, the problem isn't your IQ. It's something else completely. So that really is the million-dollar question, isn't it? If it's not about being a genius, then what is it? What separates the winners from, well, everyone else? To get to the answer, we first have to tear down a really common myth. So let's jump right into this. We're going to tackle what I call the losing trader's myth. And it's this belief that more knowledge equals more profit. I mean, it sounds right, doesn't it? But trust me, it's a total trap. You know, this is the path pretty much every single trader goes down. You start, maybe you lose a bit of money, and your first thought is, okay, I just don't know enough. You convince yourself there's some secret, some holy grail indicator out there that's going to crack the code for you. And so begins this endless search for an edge, right? You start loading up your charts with more and more indicators. You're buying courses. You're watching tons of videos. But here's the crazy part, the real paradox. That very search, that hunt for more knowledge, that's probably the exact reason you're still losing money. Okay, so if it's not about being a brainiac, then what is it? This gets to the heart of it all. The market rewards behavior, not brains. Think about it. The market isn't a test. It doesn't care what you've memorized. It's testing something completely different. And this is the massive disconnect. We think the market rewards how much we know. But the truth? The market only rewards how you behave. It's about what you actually do when things get chaotic and uncertain. And let me tell you, what you know and what you do are often worlds apart. So what's this bad behavior we're talking about? It all comes down to one word, reacting. Not thinking, reacting. A reaction is that gut punch, that emotional, impulsive response. You see price move and you just jump. It's a flinch, not a thought-out plan. And I bet some of these behaviors of a losing trader will sound familiar. You know, chasing after a big price move, trading just because you're bored, or that big one, fear of missing out, FOMO. And what about trying to desperately win back your losses? These aren't strategies. They're just pure emotional reactions. So what's actually missing here? Well, it's these three disciplines. And notice, none of them have anything to do with being smart. Number one, they don't wait. Number two, they aren't patient. And number three, they don't control their risk. It's about waiting, being patient, and managing risk. These are behaviors, plain and simple. All right, so how can we actually see this stuff? It's right there in front of us, on our charts. We need to start reading the candle story. I want you to start seeing behavior instead of just colors. Because those candlesticks, they're not just red and green boxes. They are a live feed of market psychology. Think about it. Every single candle tells a story of fear, greed, and hesitation. It's like a footprint left behind from the battle between the buyers and the sellers. And the real skill is learning how to read that story, not just see the colors. And this is how traders see a candlestick differently. A novice looks at a green candle and their brain just shouts, buy. They see a red one, it's sell. But an expert sees the story. They're looking at that green candle and seeing a story of greed and control. They see the red candle and see a story of fear and hesitation. It's a totally different perspective. And let's be clear, just responding to the color, that is not trading. That is reacting. It's a pure knee-jerk instinct, and honestly, it's the fastest way to blow up your account. Okay,
This brings us to what might be the most important part of all this. We're going to talk about the one candle mistake. It's this one little error that silently, slowly destroys trading accounts.
Look, the reason most traders lose money, it's not because the market is unfair. It's not rigged. You're not just unlucky. No, the real reason is a lot closer to home. It's because of a single mistake they make when looking at just one candle. It's hidden right there in plain sight. It's that moment you look at a big green candle and you just assume the next one is going to be green too. It's a mental shortcut, and it is absolutely fatal to your trading. And what makes it so dangerous is that it doesn't happen all at once. This one mistake silently destroys accounts over time. This constant need to predict the very next candle, it leads to overtrading, it leads to chasing, it leads to terrible risk management. It's a slow bleed that just guarantees you'll fail in the long run. So, do you know the mistake? It's trying to predict the next candle. Once you see it, you can never unsee it. Stop trying to be a fortune teller. Your job isn't to predict the next candle. It's to read the story of the current candle to figure out if your plan still makes sense. The mistake isn't reading the chart. It's thinking you have a crystal ball. And the moment you finally get that, that's when you stop reacting and you start trading.